Okay, back at you with one of my favorite funds here, and that is GDXY. I feel I'm going to have a great relationship with this one. This is a multi-year, and as I mentioned before, my plan will be to load up on the shares and then simply when I see it retracing where it's had a big run up, um, then I'll buy some GDX bear ETFs and just make some money on that and leave my shares in this to continue collecting income, but sort of offset the fact that it's declining in its NAV price. So there's strategies when you really dial in the charts and get a feel for where you are. Nothing's perfect, but you can do better than just buy and hold forever, but you're not always going to time the tops or the bottoms, but I think you can do a little bit better. Okay, so let's jump in here. 34.75 was the close, down almost 2%, and we were down a little more. Since we were already underneath our weeklies, we didn't have a cushion, right? So basically we can perform even, and if this had been down 5% and we were above the weeklies and it brought us down, then we might only be down 3%. So sometimes you soften the loss by having coming underneath those weeklies. In this case, they're up there at 38 and above, so we're looking really good. We've already captured 95%. So anyway, we closed at 1867. In some of the comments, somebody told me that they bought it at around this price, and I had a buy-in for 1857 or 52, whatever it was. I was about 3 cents from it ever getting. The low wasn't low enough, so I looked at it this morning and I've forgotten already. I already bought some shares, but I will buy more. Like I said, right now is an excellent time to buy this when it's early and it's dropping down because we're actually gaining money. So there were no new trades. We put some trades on yesterday with synthetics and also some contracts. We dropped down to a 37, right? So that's looking even better now. At the time we were 35.45 and we got 10 cents. We got a little more revenue and they did a synthetic. So let's go out. No change on the synthetic. Let's look at that. So we got 72,000, right? That added to our piggy bank. Or actually, we didn't get 72. We got the difference between 77,000 and 27. So we got 50,000, and that added to our 22. So we're up to 72,000 in the piggy bank on this 38. So let's go look at holdings since we didn't. Oh, actually, we can look at weeklies. So, and it shows up better in holdings, right? But I do capture it over here. So these 3 collective calls, and even though we wrote it yesterday, it was still a 524. We collected 20,850 in cash, and so far we've earned 95.48. And if all we did was stay below 37, we're guaranteed 100% of the revenue because we're not even near the strike price. So we may pay a penny, but that's like 99.999 capture, right? Instead of 100, but it still works for me. So let's look at the holdings and see if that tells us anything else. Well, we're a little further behind on our synthetic because these are all written at 38, but again, they're out till 719. So the fact that we're 263 under versus 236 the day before and only 66 is because we're trending down, but it's not hurting our piggy bank. You know, I used that term on some other people that confused them on a paper loss. Well, it's a paper loss. You know, I always give this example. If I buy a stock at $10, 1,000 shares, spent 10,000. If it goes to 14, Did I just make 4,000? Yeah, I did, right? I went from the value of 10,000 at 10 to 14,000 when it's 14 because I bought 1,000 shares. But do I have that money in my hand? Can I go spend the 4,000? No, because it's a paper gain. That's the way I describe it, right? It hasn't been sold yet. So if that stock dropped to 9 tomorrow, my $10,000 investment is now 9,000. So I have 1,000. Did I actually lose that 1,000? No, it's a paper loss, right? So unfortunately, here on the synthetics, we always have 1 to 2 months. The longest they write a synthetic is out 2 months, and the shortest is typically 5 or 6 weeks. And sometimes we'll roll out of one, we'll sell one so we can gain that money to buy back a loser on the weekly where we need more cash. And then the term roll is very common in the options market, right? So it means you close out a position. For instance, on our weeklies, I always say, well, let's see, tomorrow's Friday, we're going to roll into some new ones, right? Which means we either have a loss and we have to buy those back, but in our case, all of our calls are written at 37, 38, 5, and 38. So as long as it stays below 37, we're buying them back for a penny. So in a way, we're not rolling them, but the term is used. What we're doing is then putting on new weeklies. So I just call it rolling because it's getting rid of the old and buying new ones, right? It's an option roll. And in like the futures market, you're forced to do that about every month, right? If you're out on gold futures, silver futures, cattle, soybean, wheat, you roll from 1 month expiration to another as you get near the end of the contract expiration. So that's what's meant by roll. And then the option and the fund managers determine, which strike price they want to go to based on what they're seeing, the premiums and the IV and so forth. So anyway, here we are. We look good. We're going to collect. Here's detail on that 20,000, right? So the 38 is 205. The biggest one is the 38.5. Now we could buy these back for 5 cents, right? Well, actually, that's a half of 1 cent, right? And the reason is because we're so far away. This GDX is trading at 34.75. So with one trading day, so if I'm them, they should be buying these back at the open for a half cent, right? 1 cent even. It's no big deal. Just take the money, right? The only reason that this was not 99.999 is, and this is a dinky, this is small, well, it's not the smallest, but it's the smallest amount of money because they only sold this for 10 cents the day before, right? So they sold it the day before for 10 cents, 270 contracts, they got 2,700. Now they'd only have to spend $200, right, to get it back. So they're 80% of the gain, right? So, or what is that? Did I say that? 540. Sorry, I said 270 or 200. It's $540. And so, as long as they stay below 37, they can buy it for 2 or 3 cents and be done. And we collected 99% of it, of all the weeklies, right? And that sets us up as if we're going to have a payout, right? Which again, we're not, but Grateful Girl kind of, I said in my thing, in one of my videos, I don't think they're going to pay, and I've said it on other new funds, because typically every time I see Misty and I see YBit, they don't pay when that first one comes around. But Grateful Girl, Pat is her name, mentioned that Ulti paid after 9 days. So the deal with Ulti, though, is Ulti's kind of unique. Ulti doesn't do synthetics. Yieldmax has all these funds out there, like 24. 3 of them are fund of funds, right? So one of them is the Magnificent Seven, Alphabet, Apple, Google, Amazon, Nvidia. So you own those 7 underlying single stocks, so you own those 7 funds, and you get paid what the average of all the 7 funds were based on your share count, right? So the other fund, YMAX, owns all of the funds, right? So that's the most diversified by the very nature. Ulti is unique, and all of those funds either do synthetics or they just own other ETFs, right? And all the ETF funds other than YMAX and YMAG own single stocks, right? But they never own the underlying stock because they can't. The SEC says if it's a single stock, it's not an ETF by definition if you have more than 10% of your money in that single stock. So it would prohibit anybody that didn't have an option-only strategy, which is exactly what YieldMax through Zega Financial does. They put all of these sophisticated options on that mimic being long the underlying security, right? In this case, it's an index, it's GDX, right? But in most of them, it's NVIDIA, Apple, Amazon, Mr. MicroStrategy, Coin for Coinbase, all these other funds. And in our case, we're an index, right? And in the YBIT, they're using BITO, which is a BTC tracker by using BTC futures on the CME. So, but Ulti, sorry about, going off. I think it's fascinating. I don't particularly like Ulti. I own, I think, 200 shares right now. I just tried it out. But honestly, they're a covered call. They go out and they pick all these super IV stocks, high IV. And usually as they move into earnings, they're really volatile, trying to anticipate earnings. And they buy the stock and then write a call, and they get good premium for the call. But most of the time they get called out. And then sometimes they don't, and now they're kind of stuck with the stock. Say you bought the stock at 20. If you write a 21.5 or a 22 and you get called out, you got premium plus the $2, you're happy. But what happens when you buy a really volatile stock and it's $20 and you write a call for $21 for $2 and the stock drops to 17? You're like, oh, right? So now you kind of got a loss. And then let's say that, so you write a call for 19 and you get $1.50. Well, now the stock drops to 15 and you go, well, this is a loser, right? The chart said it was going to go up. I don't like the way it's trading. But you're kind of stuck. Pretty soon you can't even write a call that's going to pay anything because you're underwater. So they've had to close out stocks and just stop trading them and sell them for a loss, and then try and find a new one. So their target is 15 to 30 stocks. And I would say that the only 2 stocks that are single stock funds that YieldMax has a fund in is Coney and Misty, which are 2 of the higher paying funds along with NVIDIA, but they don't buy NVIDIA. Or let's put it this way, I haven't noticed that they buy it. It's not like I look every single day. So it's a unique fund. Maybe they'll get their act together and they'll figure out, but I don't think they have a core competency of stocks. Whereas I can look at Coney and Mr. and have a pretty good idea of how they're going to trade, right? And I'm bullish on BTC, which is driving kind of both of them, although Coinbase is an exchange. So the fact that crypto is hot and in a bull market means they're going to have a lot busier time with people buying and doing all of their buying and selling on their exchange, Coinbase. And MicroStrategy just owns all that. Sorry, guys, if I go off on the tangent, but hopefully this is also educating you on some of the styles and some of the things that YieldMax is experimenting with. All right, I'll get back to our topic. So we've captured 10 cents, which is pretty darn good for what, 3 or 4 trading days? What do we even have? Yeah, right? Really 3 trading days so far. And when it opened. So it's awesome, right? And it's not like we're flying up really high, but remember the way this game is played? The game is played where you capture your weeklies. And in our case, when you're declining a little bit, we're capturing the weekly, right? And they're continuing to position in the right calls and all that. Now, when GDX starts flying at some point, is it June, July, and it just really moves up, we're going to get capped, but our synthetic is going to kick butt and we're going to lose some on our weekly. But say, it's okay. And there's a case of where if I see where I think we're really running, I might go out and buy Nugget, which is a 2 times GDX, right? So, and I'll talk about some of these things, and I know some of you are conservative, maybe just want to own the fund and leave it and never going to trade it and never going to buy anything else to counter it. That's okay too. I'll give the strategies to those that want them, right? And that's the purpose of trying to get my Discord set up this weekend. So if you've got anybody that that likes to trade gold and silver stocks or likes to get in them, in my opinion, you can be in them and be long and also have a position with a YieldMax fund, right? Because if it's roaring, we might only capture a third or a half of the really high run up that GDX has when it runs. But we're also going to get paid. And even when it's moving down like now, we're going to get paid, right? So there's a place in your portfolio, clearly when you understand, like I do, how these things actually work, the underlying. All right, so I think that tells us what we're doing. I mean, on 3 days, we've got 46 cents total income, and 10 cents of that income is payable, right? That they could borrow from this and get it. So I'm happy. I don't think they're going to pay us anything on June 5th declaration, but who knows, right? If we got up to 50 cents here, which might be hard to do, that'd be 1 or 2 more, and then got to $1 here, maybe they would pay us 75. I just don't think they will. But let's see. I'm never close to the fact that they could. Ulti's pretty unique, right? But also look at the NAV reduction on Ulti. Like I said, I own a little bit. I think I bought it at 16 or something, and I got paid, but I'm not too excited about it. But I wanted to watch it, and people have asked me to report on it. And the amount of work, if you did the level of detail that I do, it would probably take me 4 hours a day to just cipher through what all they're doing and explain it all to you guys. Okay, let me see if there's anything else. I got a lot of charts I want to start showing you guys with gold and PMs, precious. Whenever I say PMs, I mean precious metal miners. I'll use that term a lot. There's a lot of stuff out there. I collect a lot. Every day I read. I'm in a group where we talk about it a lot. So I'm really, really excited about where GDX and the gold stocks and the miners are going to go this year and next year and years ahead. So that's all I got for you today. Hopefully this helped. Have a good one. Again, this is not financial advice. I'm not a financial advisor. This is for fun and entertainment. Okay, see ya. Bye.